Hello, everybody. Welcome to Thursday. The S&P 500 was up 0.4% today. Good broad move today altogether. Lots of things were up. The money's starting to kind of flow into the market. It's been kind of exciting altogether. And I wanted to take today's video to talk about a question that came in just to, what are the categories that look like they would benefit the most from the reopening? And then what are some of the stocks that are in that category that might do well there too? And so what I'm going to do is show you the categories and then the stocks that we actually own in our model right now. There's over 800 stocks in the model altogether, and I'll show you a few of them in some of these categories. And so I'll just share my screen here. And what I've done is just kind of made a list. And so the top of the list here, we got the category. So travel obviously should benefit from the reopening. And then these are all the different stocks, that are either, Airbnb or airlines like Alaska or Allegiant, sorry, American Airlines, Avis, so rental cars, booking companies like Bookings and TripAdvisor. All of these pieces are probably going to be in line for some gains coming forward. And then movies, so AMC and Cinemark and Lions and Regis Corp are all, I think, solid plays in this area. Now, automobiles should see some good gains here as people have been buying new and used cars just to kind of get ready to be able to get out and move and maybe not want to get inside of an airplane or get inside of a bus and those types of things. So used cars with AutoNation and CarMax, tire companies, Ford, General, Goodyear, these are all companies that I think are going to benefit from this that are in our current portfolio. Banking and investing. Banking does well when interest rates go up, and investing does well when the market goes up. Both of those things are happening at this point. So, Bank of America, Bank New York, Citibank, et cetera, JP Morgan, Invesco, which is one of the investment companies, Raymond James, US, Waddell and Reed, et cetera. So these are all, I think, solid, companies that fit inside of this category that should do well here that are in our portfolios. And of course, restaurants, I think there's going to be a pretty big demand for restaurants. So many restaurants have closed nationwide. And so the ones that are left that can survive this whole thing, they might be just really doing well. So, BJ's, Cheesecake Factory, Chipotle, Coca-Cola, supplies restaurants, Dave and Buster's. Cisco is a big restaurant supply company. So is a Chef's Warehouse. Et cetera. So these are all companies that I think should benefit from the reopening that are in our current portfolio. So energy, as we start to move around more, it uses energy, renewable energy like clean energy and renewable energy group. So are going to do well, but that's sort of a future energy source more than anything. Current energy source is still oil and gas. And so I do think there'll be a big pickup there. And so you can see, Chevron and Exxon and what have you that are in this portfolio as a whole. Healthcare. We should see some increase in healthcare as people go in to take care of things that they delayed taking care of, even just basic healthcare issues and different appointments and such. That should start to really go. We might see some good gains here. And Cardinal and Tenet, I think, are two good pieces to look at. And then large events as they come back. So these are in the portfolio. Churchill Downs, Eventbrite, which is a company for scheduling events, Live Nation for buying tickets, Madison Square Garden, Manchester United soccer team, of course, Walt Disney. All of these should do well as things reopen. Clothing and makeup, we're going to go back to work in some form or fashion and then go out. So, we might be looking at, more of those. So designer brands, Elf, Foot Locker, Gap, Macy's, Sally Beauty, Vera, Bradley. So these are, all pieces that I think could benefit. Again, they're in the current portfolio. Infrastructure. And I think this is a dual play, both areas that we should see some growth in as these projects come through. And then obviously there's this infrastructure bill that might get through at some point this year. So Granite, Nucor Steel, United States Steel, and U.S. Concrete are all in the portfolio, I think, and they're all doing pretty well right now, actually, all together year to date. And then lastly is transportation. I've talked about this before, but moving people and moving things as things pick up here. So, trucking companies, Kansas Southern, there's a rail company, Lyft and Uber should pick up here quite a bit, and et cetera. So this is kind of what I see as the categories and some of the stocks that I think could do quite well here altogether. And we're positioned. We're waiting for this recovery to come in and this reopening to happen. And you want to be in some of these stocks because I think what's going to happen is they're going to exceed their earnings expectations in a lot of those particular cases. Especially since a lot of them cut back on their costs, and I think this demand is going to come in pretty quickly. So, anyway, that's what's happening today. Looking forward to talking to tomorrow. Remember that we have Go Live with Tom tomorrow, Fridays, of course, from 12:15 Pacific to 1 o'clock. You just go to golivewithtom.com, put that in your browser, hit enter, and you'll be there. And then you can ask questions through the email and what have you too. So looking forward to hearing any of your questions and trying to answer them at that point too. So thank you very much. Look forward to seeing you tomorrow. Thank you.